edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. This is the Markets Club podcast with Mike North from EverAg. We are talking about the volatility and demand, trade showdown, planting season. We were here to talk about it with Mike North from EverAg. Then we were talking about the fundamentals with Sam Hudson from Corn Belt. But here's Mike North. The volatility and demand, trade showdown, planting season. We were here to talk about it with Mike North from EverAg. How are things in Wisconsin? Do you like to watch the Milwaukee Brewers because the Cubs are good for this season?
Well, the Cubs lost to him in spring training, so I guess we're going to wait to see if the Cubs are any good as we get into the season. But yeah, every now and again I'll take in a game. But things are good in Wisconsin. Dust is flying. We're through the early plant dates for crop insurance. So guys are hitting the fields. Temperatures are getting warmer, and spring fever is in the air.
Yeah, it is. All right, Mike. What is your position on the beans markets on fundamentals with the lowest acreage?
Yeah, there's no secret that acreage is smaller than last year and certainly was the biggest donor, if you will, to the increased corn acres. But as we talk about the soybean market, that very fact that we cut acres out of the equation will be a bit price supportive as we go forward in the year. Certainly, as we stare at a big South American crop, it has weighed on our marketplace and really been, that story that's kind of drug prices lower as we came through the winter. That's compounded now further, of course, by talk of tariffs, especially following the retaliation by China and the potential lost export business as we go forward. Exports have been, lagging of late, which isn't too unlike other years. It just seems that we're maybe not going to hit the mark on the 2024-2025 soybean export forecast. So as we talk about lesser acres, I think that will help, especially as we go through these next few weeks and, focus on planting. If we can get that corn crop to go in the ground at a normal pace, I think it'll really kind of cement the idea that acres will be tight so that if we run into any weather issues this summer, we can start to again talk about a smaller balance sheet, which will be price supportive. And if you'll note, over the course of the last few weeks, we've observed that soybeans, despite all of the negative news, have really struggled to go lower. In fact, coming out of the backside of the retaliation by China, the market has in fact found some support as we've paused the the tariff that was put forward on other countries last week. So, as we sit here and look at prices, we've been able to maintain them fairly well. And I think in the face of a lot of bad news, the fact that the market has been able to kind of toe the line here at $10, really does say that there's a little bit more support here than I think a lot of people would give it credit for.
What is your thoughts on the fundamentals on the beans markets?
Well, I think there again that smaller acreage number will start to play out into the balance sheet when we start getting the USDA's first look at that, which will come out in May. Demand, across the globe may be a little bit weaker, but it's not going to be substantially weaker. People still need to eat, and we've still seen a resilience in that particular category. So the biggest question mark of late has been around exports and, what that will look like uh, through the lens of tariffs and how we transact with the rest of the world. The pause on the tariffs to all the countries but China ultimately raises questions whether or not we're going to kind of shift the deck, if you will, of who we do business with. Certainly, it's going to be tough at 125% tariff to do much business with China. Uh, but bottom line is that there are other places to send soybeans, and as we saw in the last trade war, um, we can shift the way beans move in the world in accordance with some of these new rules, so to speak. But I think you also have to look at the renewable diesel platform and ask questions about what that whole regime will look like as we move forward. There's a lot of optimism there. There's still plants being constructed. That's going to be a solid demand story for soybeans as we go forward. I think the question is going to be the actual implementation of renewable fuels and what that looks like in the Trump administration. So all the way around, there are going to be some question marks on demand, but the way the balance sheet lines up today with what we know or think we know, end of day, there may be some support here on the lesser acres that are coming our way as a byproduct of more corn.
Can you tell us about the challenges of today's planting season with the volatility for right now?
Well, so far, we haven't really seen any challenges in the planting season by way of weather. And I think as we've now come through those early plant dates on insurance with fields becoming more fit by the day, we'll likely see an increased or ramped up pace, if you will, in these next few weeks, especially in the upper Midwest. Certainly everybody's going to be gauging their seed bed to understand if it's, good for them to go or not. But we've already been seeing a lot of planters moving out into the field over the course of the last day or so. A lot of activity taking place to prepare for planting for those that maybe not be ready. And, as we take a look at the price landscape, we still see a market that favors corn. So some of that early prognostication from the USDA as to what farmers might do this spring seems to hold pretty well. And, statistically over the years, we can really support that. And when you compare the crop insurance prices for both corn and soybeans, I think producers are going to do everything they can to get corn in the ground. So we're just going to have to wait to see what Mother Nature has to say about getting it in the ground in a timely fashion.
How is the May corn meanwhile we speak?
Say that one more time, Caesar.
For right now with the cattle markets for today, does this mean that is there any chance of high demand for beef?
Well, we are a beef consuming nation, and consumers certainly have continued their quest to put beef on their plate. And as we talk about this particular market, keep in mind that it, like other markets, has in fact struggled with the conversation around trade and tariffs, and saw a pretty sizable sell-off as we came through that whole discussion. April 3rd, 4th, 5th, 6th, seeing prices drop. But we have since rebounded as, again, we put the tariffs on pause. But the fact that the Chinese have not renewed beef export certifications does make it difficult for us, even without a tariff, to reaccess that market. So, that has been a pretty sizable export destination for U.S. beef. that may have some drag on this market going forward. So far, the U.S. consumer is pretty devout in their beef consumption. We are going to be moving into the big grilling season that kicks off in Memorial Day. And certainly the whole supply chain starts moving well in advance of that holiday weekend. So prices seem to be well bolstered for now, but we really do look at these levels of price and ask just how long can we hold on? Escalating cattle prices against a box beef price that maybe hasn't moved in lockstep certainly presents that potential of diminishing packer margins, which does in fact bring into question just how big the appetite will be as we go forward. So lots of different touch points here, but yeah, so far demand, despite again the trade and tariff talks, seems to be pretty sound. And so as we work our way through that big Memorial Day weekend and kick off the grilling season, we'll be watching from there what the U.S. consumer does as to, where we're going to drive value. If it's in burger, if it's going to be in middle meats, or, exactly what are they demanding? And then that will give us a little bit of insight as to, what that looks like for cattle values going through summer into fall.
How is the fundamentals on the cattle markets with the stocks markets for last week?
Yeah, it's no secret that the stock market and the cattle market walk hand in hand. And so all of the up and down and, just gross uncertainty that we watch in the stock market is part of why we ask the questions we do about demand. And you're going to find that the pattern that we've seen in cattle prices very closely mirrors the pattern that we've seen in stock market prices. A sell-off, a rebound that has not quite returned to where we came from. This is a part of a broader question of what will the U.S. economy look like, and are we heading into recession, and how stable is our consumer? Has inflation compounded with some of this future uncertainty to maybe stifle demand? What will Americans spend their money on? These are unanswerable questions at this point, but certainly ones we ask, and certainly ones that we hope to answer as we march forward in time. But that stock market is still, depending on which index you follow, still off of where we were pre-tariff announcement. The Dow, as an example, is 2,000 points off of where it was prior to that April 2nd announcement. The S&P at the moment still tracking about 350 points below where it was. So, well off of where we were, well off of the lows, certainly outside of some of that, what I'll call fear-induced sell-off that we saw in those first days following that announcement, but still short of where we came from, and pretty much putting forward what looks like a new downward trend in stock indexes as we go forward in the coming months.
Do you have any final thoughts on this planting season with volatility for right now with the grains markets?
Yeah, absolutely. So this is the time of the year when we get really busy in the field. Generally, when we're really busy in the field and we're weighing out these new balance sheets and we're talking about, all of the next steps for the market, opportunity will avail itself and go unnoticed. And so my comments would be this: don't lose sight of what the markets are doing while you are so busy taking care of what you need to be doing in the field. This is a time of the year when producers really need to be dialed in, and that's difficult, but that's where having a professional on your side and somebody in your corner to work with you on price is so important. Make sure you're staying on top of it, because this is the time of the year, just like harvest, when a lot of great opportunities slip by unnoticed.
Thanks, Mike.
My pleasure.
We've been talking.
I like their coleslaw. Signature.
I'm talking about the planting prep with these commodities markets, especially with the weather in the Midwest for the last couple weeks with the rain and demand for soybeans. Now he's know about it is Sam Hudson from Corn Belt. How are you?
I'm doing well, Cesar. It's always good to be with you. And got the sun shining on this spring day and got planters in the field and just needed to warm up a little bit and get a little more progress going.
Let's discuss about these grains markets for right now with the weather and the trade deficit. For sure, however, could you tell us about the challenges for the planting season, Sam?
Well, so far it looks like the challenges are going to be in the southern producing regions of the Corn Belt, down in Kentucky, southern Illinois, parts of Missouri, the lower Mississippi Valley, all the way up through the Ohio Valley. They had anywhere from 3 to 13 inches of rain in some of these places over the last couple of weeks, and it looks like a wetter pattern is going to set in here again for the next week or so, and so that's going to pretty much put the damper on any field work and potentially into early May. And if those delays get lengthier, then you can see the markets get a little more riled up. Elsewhere, it looks like progress is going to be pretty decent in the central Corn Belt and in the western Corn Belt. Looks like a lot of beans are getting put in the ground before this rain event, and then we can see what happens after that.
How is in central Illinois nearby Peoria, Sam?
Things are good. Conditions from what producers are telling us are very, very good. The only complaint is the ground temperatures are still kind of low, in the low to mid 40s in some places. In an area where they've got heavy amounts of clay, they're not really able to do as much field work quite yet until those temperatures warm up. But otherwise, so far so good on the conditions. Everyone's pretty pleased with how it's going in. And like I said, after a bit of a rain, I think we'll be really anxious to get those temperatures warmed up.
How was your thoughts with the planting intention on the corn acreage for this spring?
I guess it's not surprising to see corn, exceed soybean intentions on the area. I guess at this point, when you look at the price differential, our base price this spring is about the same as it was last year. In fact, a little bit higher for corn compared to soybeans, where it was almost $1 lower. And so when you compare those just from a profitability and return on investment standpoint, the corn is definitely offering a better route, even though it costs more to put in. And that being said, I think a lot of producers have used the opportunity to go out and lock in some pretty high level insurance to provide a backstop for those input costs that they've invested into the crop, and that will continue to motivate them to get it seeded as long as they have the conditions to do so.
How is the fundamentals on the beans market?
Fundamentals on beans are not great, but they have improved. I would say the biggest weight and concern at this point long term is just going to be that trade barrier with China, tariffs in general. There's no one on the globe that can produce the amount of corn that we do for exportable supplies compared to soybeans. Brazil definitely can't do that. They're planting 112 to 113 million acres of soybeans, which is almost 40% larger than what we're doing. And so no matter what, China's going to have an outlet to get those supplies as long as Mother Nature cooperates. But what's interesting is despite the fact that they're going to have a pretty sizable harvest, and they're in the midst of that right now, we're actually seeing the U.S. remain pretty competitive. And part of the reason is because of some of these trade barriers and China going to Brazil exclusively. That's funneling other players and other buyers around the globe to do business with the U.S. and at least help keep those values underpinned until we see what Northern Hemisphere weather does.
Can you give us 3 things about the fundamentals on the beans market?
3 things, fundamentals for beans. Again, I would say, policy is definitely one of the big things. Biofuel policy, specifically with the use of soy oil. We've already seen a big improvement on things with more regulation on used cooking oil imports. But I would say that's one of the big settings, I would say, for the market moving forward over the next 3 to 5 years. Secondarily is what we just talked about, the tariffs and trade. What can we do in terms of setting up these trade agreements with China and other countries around the world? And third and lastly, I would just say, we have to remember, again, that area that South America continues to raise and how that could influence what we raise here. I really think that we're going to continue to see more of a desire to plant more and more corn here as opposed to soybeans. As long as they still have the ability to do that.
Do you have some concerns about these prices for next couple weeks?
Not entirely. I would actually say, with the forecast that we've got going on right now, it's just wet enough. I think you're going to keep the markets underpinned. When we saw the acreage expectations in March, combined with a trend line yield, we don't have a whole heck of a lot to lose. And so even if we lose a little bit, I think that's going to keep people thinking about the what if scenario. And as long as we can stay away from any worst case scenario trade headlines, I think the Board of Trade might be somewhat insulated from this.
What are the liquidation for the cattle markets right now?
Liquidation in cattle markets, that was pretty healthy. We've actually seen prices come back to where they were trading here before that big drop. And part of it, I think, is because those headlines have cooled down a little bit, and that allows markets to trade more of their own fundamental footing. And I think we've seen that not only at the Board of Trade, but here at the CME as well, as we see these prices start to converge with those cash prices that we've been seeing at the sale market.
How is the fundamentals on the cattle?
Still pretty supportive, I would say. We have these inherent risks along the way where funds get too long, and we've already seen that flushed out once. Again, I think that was healthy. But when you look at numbers in general and the fact that consumers are still paying in here, it's supportive of things, at least as we go into summer months. If we see a bigger looming economic problem, I think that can slow things down a little bit. But at the end of the day, it's not going to produce more of what we need. The only thing to do that would be a potential, drop in interest rates or a continued improvement in the marketplace. And I think that's been a challenge as prices rise. You have a lot of older producers getting out. And I think that continues to just, be another edge to the sword here on the way up.
Finally, what is your thoughts on the stock market?
The same thing there. I think, when you look back and you're between 1 and 3 years, I think you're going to see that this was probably an opportunity in a lot of places. I think there were a lot of places where things were a little overcooked anyways, including the tech sector and some of these chip companies. But as we decide, and get guidance on what this policy is going to look like, and as some of these trade deals come together, I think we're going to realize that the U.S. is still kind of a superpower from an economic standpoint. And it's going to be hard for people to get away from that, even if the short term provides some turbulence. And it doesn't mean we're done going down yet, but there again, typically if you look at it historically over time, when you see these large percentage drops, it's usually an opportunity to continue to take ownership for the long term.
Thanks, Sam.
Thanks, Cesar.
All right, good to hear from you, Sam. That's Sam Hudson from Corn Belt for the Markets Club podcast. Thanks to Mike North from Everag and Sam Hudson from Corn Belt. This has been the Markets Club podcast. I'm Cesar Delgado. You have a good day.